Hey, folks, welcome to Weekend Technical Analysis Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This Weekend Technical Analysis Update for Monday, June 6th through Friday, June 10th, 2011 is brought to you by Realtic. Now, just for those of you that don't know, Realtic is the software I use to trade. It's the software that you are viewing now, and by far it is the best software I have ever tried in my life. So again, it is a great product, a great service out there, and I encourage each and every one of you to try it out. You can get a free trial by contacting realtic.com, and again, just let them know that you saw it on InTheMoneyStocks.com's videos, and they'll take good care of you and give you a great free trial of this software. All right, guys, let's get right into the charts. First things you're looking at is the Realtic software on my SPY, which mirrors the S&P 500. And again, one thing to note here, folks, you can clearly see that we actually had a significant breakdown on Friday. Now, it hasn't been confirmed. Many of you out there that are watching this free video, you may not know what confirmation is. It is a signal that confirms a breakdown. You do not have that signal yet. So yes, we closed below this white trend line right here, which you bounced off of right here, and you bounced off of on Thursday. Friday, we closed below it. There is no confirmation yet. So again, we're waiting to see if it confirms on Monday. That will be a big indicator for whether or not this market collapses further or maybe bounces back up into next week and towards the end of next week. All right, so that's number one. Secondly, what I have to kind of go over here is the pivot top from May 2nd, 2011, which was about a month ago at this point. That was at the exact high that I came on these videos, both free and premium videos, to our Research Center subscribers and Intraday Stock Chat subscribers. And I said, guys, this will be the high of the market. It was called within 8 cents on the SPY. The SPY hit 137.18. I had given 2 weeks before this date, folks. I said that was going to be the high of the market. So again, just another amazing call. And by the way, if you want these real time, if you want the live calls and live alerts and text message and email alerts of trades and all that fun stuff and education and proprietary techniques, there's a free trial to the Research Center and a free trial to the Intraday Stock Chat for 1 week. And I do encourage you to all just try it out. There's no obligation. As long as you cancel before the end of the free trial, it's a freebie. You know, who doesn't like it free, right? The policy and my always thought is if it's free, it's from me. All right, let's get back into the markets. Again, you can see ever since we hit that pivot top, we've come down to first support, 20 moving average, bounced up. Down to second support, 50 moving average, bounced up. Down to third support, pivot low, bounced up. Now we've come back down to this, and we've broken it. Now notice how each first hit, you get the bounce off each level. Hit number one. All right, it bounces, right? And again, we can draw a little bit of a line right there. It bounces to here. Hit number two, as it came down to the 20, it broke and went down to the 50, which was hit number one. It bounces. Hit number two of the 50 breaks. Then you get a nice big bounce. Hit number three comes down, and after you hit on the first hit right here on the white line, it bounces, second time breaks through. Now, again, we will watch for confirmation, but I think it's important because that's a key methodology point, is that when you only are trading and you want the optimal swing trades or investing setups in this market, you have to only be buying first hits of supports. Second hits of supports are too risky, especially in this downward cycle market right now, and you do not want to take them. So again, you can see how it works. Here's your first hit, it bounces. First hit of the 50, bounces. First hit of the white line, bounces. And obviously, the thought process is, if you hit this white line here, which is the pivot low going back to the 18th of April, then that should be a bounce as well. And I kind of think that we might hit that early in the week. I think it's very possible that we'll hit that Monday or Tuesday in the coming week, in which case you should get a nice 1 or 2 day bounce off of that level, and then it may even trade lower. If we confirm below the white trend line, which is right here, folks, and let me just draw that in right here. If we confirm below this line early in the week, which could enable a hit of that line, I think you get a small bounce off of that, but this market inevitably is going much, much lower. So again, I encourage you to take the free trial of the Research Center, a free trial of the chat room, and again, you can get live trades, you'll get live analysis, you get videos every night giving play-by-play of the markets and setups for the next day. It's a swing trader's and investor's dream for the Research Center. All right, because you're getting the types of trades where you can manage your money and do the right moves. I mean, the winning percentage maintains itself at 90%, folks. 90% winning trades. There's no one out there. I don't care. You go to any hedge fund out there, they're not going to be able to tell you they make money on 90% of the trades. It just doesn't happen. All right, so again, that's the Research Center for you. I encourage you to join it. Now, let's go to the intraday and discuss a little bit about the market. What I'm going to do here is go back to basically the the whole week. I mean, if we look, remember this last week was a 4-day week. Monday was off. Here's the previous Friday right here, which was a little bit of an update. Monday started with a gap up. The gap up reversed on a very, very light volume. We came down, and then by the end of the day, they floated it back up. I thought it was very interesting how they saved the market here, but that was actually a fake out. What do we mean by fake out? Well, oftentimes what will happen when the market looks so bullish with a surge into the close, it's actually setting up for a bigger fall. And that's exactly what we got. We got the ADP private sector number on Wednesday at 8:15 a.m., and it showed only about 38,000 jobs created in the private sector. That was an ugly number, and that shocked the markets. Remember, with all the money the Federal Reserve is printing right now, everyone thinks that it's going to be a fantastic recovery, and we're going to be back to 2007 highs in every facet of the economy within a year or so. I think this ADP number on Wednesday gave a major reality check to the overall markets, and down they came. Look at the collapse here, folks. Down, 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 down. Thursday was a pause day. We had actually called for a pause day on Thursday. That's exactly what it got because the jobs number, non-farm payrolls on Friday was coming out. Non-farm payrolls comes out. It's 55,000-ish, give or take a little bit right there. Another bearish number. Analysts had expected 100,000 in creation. It was about half of that. That was very bearish, and markets got another slap in the face there. Initially, we gapped down, rallied back, but by the end of the day, people just were not willing to hold over the weekend. And I think that's what you're seeing here, folks. Notice the action on Friday. Early in the day, people bought the gap down because, again, all right, so the jobs were only created at 53,000, but by the midday session, we were almost back to the flat line. But then what happens is into the close, anyone who bought here, or here starts to say to themselves, wait a minute, I'm not really holding over the weekend. There's no way, considering what the market's been doing lately, that I'm going to hold over the weekend. Therefore, they all sold, and the markets came back towards the lows of the day on Friday. And again, the close on Friday is key because on the daily chart, it closes below this line right here, this white trend line right here for the first time. And this is actually a major level. This 131-ish level is a major level. We will watch to see if it confirms below. In addition, what I thought was very interesting is that this actually confirmed below the 50. For those of you that are premium members and understand, and if you're not a premium member, just take the free trial or take the subscription to the Research Center because I discuss and teach that stuff basically all the time. But the confirmation, this is actually the first time here on Friday that we confirmed below the 50 as well. Here you got below the 50 right here, but you never confirmed. Then you bounced back up, and that's exactly, when you don't confirm, it tells you you're going to bounce back up. Then we came back below here, closed below it, paused, and finally confirmed to the downside below the 50. So you've actually confirmed now below the 20 and the 50 moving average, which is very bearish. It actually leaves the downward sight of the market possibly all the way to the 200 moving average, which is down at around 125, 125 and a half. All right, so I mean, there's some big things at work here, folks. Again, granted, we have not confirmed below the white trend line, so I'm going to wait for that to make the call, obviously, early in the week. But if that does happen, you will go south. If it doesn't confirm here, if you do not confirm tomorrow, I think you actually could easily bounce back to the 50 moving average right here, which then at that point would be a short-term shorting opportunity, probably into some point during the week. All right, so we'll keep our eyes very, very toned in on this or honed in on this level and watch it accurately early in the week. All right, let's go over the dollar chart, folks. Again, we want to take a look at the dollar. The dollar continued to fall here, and one thing I just want to show you, folks, I'm not going to tell you where to buy this dollar because there is a level coming up that I want you to, and I've actually been calling for this level for about 2 weeks, and people initially when we were up here, they said, oh, there's no way, the dollar's coming back in the short term to this level, and I said, guys, I think it's coming back to this level, and again, that level's getting closer and closer, but again, you have to join the Research Center to get that buy level. I will put it out as an alert tonight before tomorrow's action. So if it does hit tomorrow, you will be able to pick it up. And this would be a long dollar trade in the short term for a bounce. All right, so be ready for those of you that are into Forex or just trading the dollar or into trading anything off of the dollar, whether it's the FXE or the euro. This is going to be your chance to do it. All right, but again, the dollar having a beautiful fall over the last week and a half or so. Gold continues to float higher. Again, not surprising to me to see gold up on Friday because of all the instability in the world based on the jobs numbers. I do not think it's far-fetched to think the gold or on the GLD you can head back to your double top. Silver continues to kind of be under a little pressure, although did get a small pause day on Friday. You can see this nice move up into this gap fill area of 50 moving average, then a fade. And again, the reason silver is a little weaker than gold here, first of all, it had a much bigger run before the correction of late, but secondly, it's an industrial metal. All right, it's partially a store of safety like gold, but it's also an industrial metal. And with the economy looking like it's slowing a little bit, it looks like that's really the cause here of why silver's not getting as much of a bid as gold has. By the way, guys, the jobs report was very poor. Private sector was very poor. Jobs report as well. We've had a lot of negative news out there recently. I do think that that's partly because the Fed drug of insertion here. Remember, they're sticking the market with a needle, inserting trillions of dollars over the last couple of years. I think partly that's having a less and less of an effect on the market because remember, just like an addict, a drug addict needs more and more drug to maintain that high. The market's the same way when you're injecting. If you're injecting the same amount of money, eventually the market adapts, just like your body adapts to any drug you take, whether it's an illegal one or a non-illegal one. But I think the key is also to recognize that part of this slowdown is occurring because of the Japan nuclear crisis and what went on there. Remember, Japan is basically the third biggest economy in the world, so their hit is obviously going to ripple through the global economy, including the United States. And I also think the increase in oil prices over the last couple months, I should say, has also taken a little bit of a toll. So as that stuff passes, you'll probably see a small bounce back in jobs maybe next month. But again, with QE2 ending at the end of this month, going forward, I still think you're going to continue to slow, and eventually the market will have to correct a little bit more. It's going to be interesting to see if it corrects in the short term more or if it just in the longer term. We will watch it very closely, though. All right, let's go on to a couple other charts here. The USO, last week the USO net was basically on the flat line. Here's early in the week. You had a little pop and then a pullback, and we basically closed flat. You can draw a straight line right across there and see that for a fact. Oil itself is kind of just struggling. You have a chart pattern here, in my opinion, really consolidation. And this is the thing that's kind of starting to worry me a little bit. Not necessarily worry me because I'm a trader. I could go either way. But for those of you that are bulls out there, this would be worrisome, is that the big down move here, you have to look at this as a little bit of a bearish triangular pattern of consolidation, which is also known as an in spirit of bear flag. And if this starts to break, I think it's going to take out the 200, and first stop is going to be somewhere down in this vicinity down here. All right, you have this pink line above it right here, down to here, and somewhere in this X is where it's going to head, and that could be very soon, in fact, based on this triangular pattern. So we're going to watch and follow this very, very closely in the coming weeks. Next up, what I want you to do, folks, is now just take a look at some of the major stocks out there. I thought it was very impressive that Goldman Sachs had an up day on Friday after the markets got killed late in the week, but even with the markets down on Friday, Goldman came back. I do think the financials are trying to make a little bit of a bottom here. All the bad news seems to be out for them, at least in the short term, and they're holding up better than the technology stocks and better than some of the S&P commodity stocks. We've seen Exxon and Chevron get hit big. Apple started to come back in after a good surge over the last week or so. Research in Motion continues to get hit. By the way, Research in Motion getting near a buy price. Be ready for that for those of you in the Research Center, as I will put out a hot chart and alert on the buy level on Research in Motion, which is not too far away. If it gets smoked early in the week, we could hit that level, and you will be ready for a long at that price, okay? And again, this is in the Research Center. You can take the free trial to get this information. I encourage you to sign up. We have a No Hype Live broadcast. That's a live broadcast where you can ask questions, and we'll be going over charts, setups, and trade setups. That's tomorrow night. A hidden gem report, which is a small cap report for a longer term gain of 50%, will be coming out early in the week. We also have some other keys coming out in terms of hot charts and alerts and all the videos and so forth early in the week. So be ready, folks. Again, you want to get involved here and get in the markets. Other than that, chart-wise, I mean, everything is looking a little bit on the bearish side. But again, that's just the nature of what's happened in the markets. Just be ready. Remember, here at In the Money Stocks, we don't care if the market goes up or down. We are going to play it either way. In the last 3 weeks, I've had as many, if not more plays, winners on the long side by playing support levels that have hit and bounced than I have on the short side. And again, the 90% success rate, that means 9 of every 10 trades are profitable here at In the Money Stocks on an average. And again, that's why people love us, because of our teaching techniques and the winning trade percentage. So we encourage you to join us. Take care, folks. It's always been a pleasure. And again, let's have a great profitable week like last week, like the week before, and many weeks before that. Take care, folks.